Dear students, now we are going to see Unit 12, Commercial Banks in India. In the previous unit, we saw Reserve Bank of India and its departments. In this unit, we are going to see the commercial banks. In the previous unit, we saw how RBI is taking the charge of the banks, bankers bank. We saw RBI is a government bank and bankers bank. So for banks, for all the commercial banks, RBI is the head of the bank. For all the commercial banks, for all the banks. So RBI is the head bank. Now, what are the various contents in this unit we are going to see. So what is commercial bank? The name itself says commercial, minting money, earning profit. Commercial means earning profit. So any transaction, profit will be there. So that is commercial. So commercial banks are created for earning the profits. So role of commercial banks in India, the structure of commercial banks, the types of commercial banks, the functions, agency services, and general utility services. So these are the various areas we are going to see in this unit. So the commercial banks, they are with so many things, undertake their functions. They are giving mortgage loans, car loans, businesses, organizations. So these types of loans they are giving. So even in the previous units itself, we have discussed about what is the banking functions. So what are banking functions? So banking functions means accepting the deposits for the purpose of lending, as I told you earlier in the previous unit itself. They accept the deposits from the various public and they offer, that is they give loan also. They are accepting the money for the purpose of lending only. Okay, they give loan also. Suppose, for an example, if the commercial bank, if one bank, suppose the X bank, they are accepting the deposit, they are taking the deposit from one person, 10,000 rupees they are taking. Now the rate of interest is, suppose, for an example, we keep, so 500 rupees. The interest is 500. No need for any rate or anything. The interest is 500 rupees. Now, the same 10,000 rupees, keeping some reserve, 10% reserve they have to maintain, whatever may be the deposits they are receiving. So 10% reserve minimum they should retain. The remaining amount they are lending. And suppose for the same 10,000 rupees, we keep that for an example. 700 rupees is the interest they collect. So 700 they collect, 500 they give, 200 rupees is a profit for them. So in this is the major commercial income for the banks. Bank is a financial institution that performs several functions like accepting deposits, lending loans, agricultural and rural development. So they undertake for the agricultural, rural development, all these were commercial banks, especially Indian Bank and all rural banks in all the rural areas. One manager, one bank, some three, four employees only. With that, they started rural banks. So, a number of banks they have started. Because of that, after the implementation of all these rural banks, the agricultural person, that is farmers, previously the farmers, whenever they want to take any loan, they'll go to money lenders, they pay that much hectic interest they'll pay. But nowadays, when we happen to see any rural bank there, all farmers will be there inside and they take loan. Even they are illiterate also, no worry. They are going there asking the clerk person, they know these people can't write anything. So he himself will fill up everything. There will be a separate person for assisting all these things. So they will inquire, they will do all this work for the purpose of farmers and they'll take loan. So when they were taking for the purpose of agricultural, this loan facility, again the rate of interest is 4%, 5% only. So that much the rural area development, the commercial banks are at the back of rural area development. No doubt on that. Now, bank plays an important role in the economic development of the country. Because of the bank only, the economy has been developed a lot. This, it is necessary to encourage people to deposit their surplus funds with the bank. For normally, previously there was a system, people they used to keep money in their bureau locker itself. But nowadays it is not like that because everything is in the bank only, banking system only, all online transfers only. Or GPay, phone pay, bank transfer, net transfer, all like that only. So we take money also by in that way transfer, we pay also like that. So this cash transactions itself got reduced. Even the salary is credited to their account. So salary also credited. These persons pay rent also by transfer, purchasing provisions also by transfer, even purchasing some fruits for 100 rupees by phone pay or GPay or this pay only, Paytm or like that. Nowadays only when we have account money and one phone is enough. We can go even to that one hotel, even we eat for 60 rupees or 70 rupees also immediately we can GPay and we can come out. We purchase any vegetables, we can pay and we can come out. No need for carrying the cash at all. Even for train ticket, flight ticket, we pay like that and we can. No need to go, stand there, give cash, take exchange. No, nothing like that. The process is being much simplified. Even withdrawal from the ATMs are got reduced because we not needed to withdraw money and to pay in cash. Not needed. We transfer as it is. So people feel very much comfortable over these transactions, over this methodology. So it is necessary to encourage people to deposit the surplus funds. So normally, whenever they have the surplus amount, it is in the bank and they convert into the funds in the bank. These funds are used for providing loans to the industries, thereby making productive investments. So these funds they are utilizing for the sake of promotional activities of the economy. So it is a clear chart given for the functions. Primary functions. What are the primary functions? Total functions are classified into primary function, secondary functions. So what is the primary functions? So the primary functions are accepting deposits, providing loans and advances, credit creation. So that's what I told you. This credit creation is a concept, is really a beautiful concept. Credit creation, they are creating the credits. They are creating the credits. They don't have, but they are creating the credits. 10,000 rupees accepted as deposit. 10% retained. 9,000 rupees. Lending to a person. That person's account it is credited. We got, suppose the bank received the deposit from Mr. X, gave loan to Mr. Y, 9,000 rupees. And that amount is deposited in his account, credited to his account only. Through the account only, the person is eligible to withdraw the money. Now, Mr. Y, it is not necessary for Mr. Y to withdraw the money immediately. So what Mr. Y is retaining the money in his account itself, and when he is in need, the time he can withdraw the money. So what happens? The money is there, 9,000 rupees in the account, keeping 10 percentage, 900 rupees. 8,100 rupees, the bank can again give the loan. So with 1,000, two credits as given. This is called a credit creation. So the credit is created. Next, it acts as an agent, overdraft facility, discounting bills of exchange, provides locker facility, issues traveler's check. These are the secondary functions. There are more secondary functions. This is little only. We are going to read all the secondary functions. So what are the major secondary functions? So agency services and then general utility services. So separate heading we are going to read. So overdraft, cash credit, loan, all. Okay, we'll see that. The next slide. A bank is a financial intermediary that accepts deposits and channels those deposits into lending activities. They are the active players in financial market. They are the active players. So in the financial market, then they are banks. The essential role of a bank is to connect those who have capital with those who seek capital, who have money, those people invest, who require money, for them they will lend. So they are the connecting people. After the post economic liberalization and globalization, there has been a significant impact on the banking industry because everybody they opt banking facility only. That's what government of India planned to start to establish banks in all the rural areas, in all the areas, even in the same area, two branches. Even in that time also, when we see banks are crowded only, because every person, there is no single person without account. Every person they have the account. It is there. So Modi implemented one scheme as a zero balance account. So in that account need not have any balance at all. We can open the account, we can withdraw till the end. It's there. Banking in India originated in the 18th century. That time in the olden days, they say how the banking system prevailed. There is a name called Banco. With that name only, the bank benches. They used to keep the money in benches. They keep the money in benches. The vendors, they keep money in benches. And those who want, they'll come, they'll take the money and they'll pay interest. They'll give product or like that. They have traded in the money. Then afterwards only, the banks have come into existence. But the system of banking originated long back. It's not a new concept. It's originated at the long back. The arrival of currency is a long story is there. The arrival of currency, the olden days, how the currencies or they implemented the currency because barter system was prevailed, exchange of goods to goods. Then afterwards, the currency slowly they have introduced gold coin into the cattle also considered as currency, that is money. The person who has more cattle called more rich person, less cattle suddenly one day all died, then he become immediately the poor person. So the system they wanted to change. So like that, slowly they have introduced this gold, silver, dance. Then afterwards only this currency, the paper notes got implemented. So once they were issuing the bank notes, they got the system, they had the provision and the rules to keep that much gold inside. 1,000 rupees, suppose 1 lakh gold it is inside, 1 lakh currency can go out. So this was a system they followed initially when they started to print the currency notes and circulate. This was a system. The oldest bank in existence in India is the State Bank of India. It is previously called Imperial Bank. The State Bank of India called Imperial Bank of India. It was a private bank only initially. Then it was nationalized and renamed as State Bank of India. So it is a government owned bank. In 1806 itself, it is the government owned bank. It is the largest commercial bank and having more than 3,000 branches. So currently, India has 96 scheduled commercial banks and 27 public sector banks and 31 private sector banks and 38 foreign banks. So we will see what all these banks functions. Today, banks have diversified their activities and are getting into new products and services that include opportunities in credit card, consumer finance, wealth management, life and general insurance, investment banking. So, all these things. It is not only with accepting the deposit and lending, the banks diversified its functions in these areas also. The role of commercial banks in India. The commercial banks' activities are mainly to enhance the growth of economy of the country. So banks promote capital formation by mobilizing saving. So all they like see in the picture itself, when small this much only gold coin, the small leaves. When more the last one, the more gold coins, bigger leaf. That means the leaves are rate interest. More saving, more interest. Less saving, less interest. So instead of keeping the money in my bureau, I can better deposit in the bank so that I can get some interest. So trade development, employment opportunities. How employment opportunities? Nowadays, this is seed capital. The previous slide we said seed capital. That means, suppose if I'm having the idea of starting my own business. So what I do, I'll go and approach the bank. The bank will give me loan. With that, I will start the business. So now I got the employment, and under me some 2 3 people are working. I will work, I will earn, and I should repay the loan. That is also there. Okay. So the banks will give the loan based on the machines, all those things were there. Sometimes a personal also, it will up to certain limitations only. Then balanced development of different regions. balanced development. So that's what I told you. The banks, how the banks are established in the rural areas also. In all the rural areas, small villages also, they have started the banks in order to increase the banking facility to the people they live over there. Then development of foreign trade. So what is this foreign trade? Increasing export and reducing the imports. So they give loan for the exports. So in order to increase, so the rates also get differ. For the export, the rate, for the import, the rate, the permission, everything will get differ comparing to the import and export. It is there. Then agriculture development. Agriculture development is a vast area what the banks were initiated now, what they were doing now. So normal case, when we pledge jewel into the bank and when we get the money for 11 percentage interest, farmers they take loan for their agricultural purpose for 4 percentage loan for the normal activities. They can give their loan, they can give their field documents, and they can say that it is for the purpose of agriculture, and they can take the loan. So influencing economic activity. So they are influencing the economical activity. They are encouraging then monetization of the economy. So they are having the vibrant power over the monetary policy implemented by the RBI. So they control, they do that, they execute that. Then finance to government. Whenever the government is in need of finance, banks only they provide. RBI provides, commercial bank will give it to RBI, RBI will give it to government. Then help in monetary policy. Banks are entrepreneurs. They create, they are the creators. Now, commercial banks encourage the habit of thrift and mobilize the savings of bank. So commercial banks, they are only creating the thrift. That means funding, depositing, increasing the deposit with the banks. So mobilize the savings of people. Mobilize means moving from my bureau to bank. It's mobilizing. These savings are effectively allocated among the ultimate users of funds, investors for product basis of economic development. Next, provisions of finance. So what are the various finance? Commercial banks are very important source of finance and credit for trade and industry. The activities of commercial banks are not only confined to domestic trade and commerce, but extend to foreign trade also. So they are not doing only for the home trade. It's not that only. They are extended their thing to the foreign trade also. So developing entrepreneurship. They give loan to the budding entrepreneurs and encourage them. Since banks are providing this much loans to the younger generation, then only new shops, stalls, so much we can see nowadays. So they're purchasing auto, car, or they are doing all these things are possible by getting the finance facility from the bank. So banks promote entrepreneurship by underwriting the shares of new and existing companies and granting assistance in promoting new ventures or financing promotional activities. So, banks promote entrepreneurship by underwriting the shares. This is the next cadre. Banks, they do underwriting job. So, what is the meaning for underwriting? So, what is underwriting? Suppose, for an example, X Limited. X Limited issuing 10,000 shares. Each share cost 100 rupees. Okay? Example only. This is an example. So 10,000 shares it is issuing the open market. Primary issue, open market, they are issuing. Okay. All public has to get subscribe the shares. In case it is a new company, how people will believe them? How people will believe X Limited? Whether X Limited will really do the business well and it will give the dividend as they promised in the prospectus. What is the guarantee over there? So, only the known people of X Limited will buy the shares of the particular. So, what the others? Others will not purchase. But 90% of the shares must have been purchased, subscribed. The term for purchasing the shares is subscribed. So 90% of the shares to be subscribed by the open market, by the public. Then only the company can start its functions. Otherwise, the company cannot start. It cannot execute any of its activities. So, it is a rule now implemented when the company is being started, when it is being issued, that time itself, the procedure of underwriting is coming into the existence. In case underwriting is a process where whatever may be the shares, unsold shares, will be purchased by the banks, whoever may be the underwriter. So, unsold shares will be purchased by the underwriter. For this purpose, underwriting commission will be given. For this, different percentages are given. In the corporate law, it is given. Separately, it is given. So, for the equity shares, for underwriter share and public share, 2.5 percentage, and up to 5 lakhs of capital, 1.5 percentage, 1 percentage. For so preference shares, equity shares, debentures, it is given differently. The percentage 2.5 percentage, 1.5 percentage, and the commission, it should not be more than this. So the maximum commission is fixed by the corporate law. So now underwriter is clear. Who is underwriter? Underwriter is a person who purchases unsold shares of the issue of the company. So these banks are executing the underwriting. Banks are acting as an underwriter. So what the banks will do after purchasing these unsold shares? What the bank will do? Bank will sell it to his clients. So the clients will believe the bank. Only to the prompt companies only the bank will act as an underwriting. So the clients will believe the bank. 1 or 2 years when things were going on in the normal way, then automatically the value of the shares will get increased. No doubt on that. In this way, the banks are creating the entrepreneurs. So small level capital providing small level entrepreneurs. for the big level like this type of services they are doing. So banks finance sick industries for making them viable unit. Again coming, what is the meaning for sick units? A sick unit is not making profit, continuously earning loss for the preceding 3 consecutive years. That particular companies are called the sick companies. So the banks will give loan to those companies in order to make them vibrant. Now, promoting balanced regional development. One side is in the economy, it is there always. So one area growth is higher, other area growth is lesser, then it will not be a balanced economy. So the nation has an idea to have a equal development, equal growth in the country. In order to have this one, banks have implementing so many facilities in the rural areas to have their economic development. So commercial banks provide credit facilities to the rural area people by opening branches in the backward areas. As I told you earlier, so many rural banks are established. The funds collected in developed regions may be channelized for investments in the underdeveloped regions in the country. So whatever the income earned by the earned in the towns, all those are diverted to improve the backward areas. So in this way, the banks are executing to promoting a balanced regional development. Now, next we'll go for what are the various loans a commercial bank offers. The commercial banks advance credit for purchase of durable consumer items. It's a consumer durable products. Okay. So whatever that vehicle loan, car loan, vehicle loan, okay, jewel loan, all these loans are available. But all these loans must be paid back. That is the next thing. So banks are giving, then we can go, just get the loan. Yes, okay. Like that we can't go. The amount must be paid back. Okay. So in this way, banks helps in creating demand for such consumer goods. Previously, some years back, when we see there was very less number of four-wheelers. Only two-wheelers we can see much. The four-wheelers, the existence of four-wheelers are very, very less only. But nowadays, when we see in the road, comparing to the number of buses, the four-wheelers are occupying the entire area. This shows what? How everyone got the money of going in the car. Is it so? No. Everyone are eligible to take the loan, car loan, and so they are taking the car, purchasing the car, and they are going in the car. Only with 1 lakh rupees down payment, a person is eligible to get a car of 5 6 lakhs worth about the car he can take. And every month he can pay 5,000, 10,000 rupees like that EMI. So he is the owner of the car and he goes and comes to the office in car. So like this only, many people are purchasing the four-wheelers. Even the house, so many houses, new built houses. Because by the way of taking the loan, paying the EMI, so people are the owners of the house. This increases the standard of living of the people in the country. Now, The commercial banks, RBI, the head bank. Below to that, scheduled bank, unscheduled bank. So what are scheduled bank? Scheduled bank means in the RBI's fourth schedule, what are the names are mentioned are called scheduled banks. Some banks will not come under RBI schedule. So schedule means commercial. So those banks who execute commercial activities are coming under scheduled. So the banks which are not executing any commercial activities only for the sake of service, such banks are not scheduled banks. So our scheduled banks are commercial banks. Again, commercial banks are classified public sector bank and private sector bank, foreign sector banks, foreign rural banks. So these foreign banks, who are foreign banks? They have registered their corporate office in foreign abroad, out of boundary of India, but they have their branches inside the country, in our India. So they are foreign banks. Then the private sector, private banks, and public sector, government banks. But all these banks are coming under the purview of RBI only. Whatever the rules, regulations, norms, RBI circulating, announcing, all banks are mandatory. It is a mandatory to all the banks to follow the rules, regulations given by the RBI. Now, the structure of commercial banks in India. So, what is the structure? The commercial banks can be broadly classified into two heads. The scheduled banks. The scheduled bank refers to those banks which have been included in the second schedule. So it is second schedule of Reserve Bank of India Act 1934 in India. 1934 Act implemented in 1935. The scheduled commercial banks are of three types: public sector, private sector. So the public sector banks are owned and controlled by government, as I told you. The main objective of these banks is to provide service to the society, not to make profit. Though all transactions are executed for profit motive only, but there must be a service to the people. The basic objective is service to the people and to enhance the economic development. So State Bank of India, Bank of India, Punjab National Banks, so these are many public sector banks per day. Then private sector banks. So the banks owned and controlled by private businessmen. Main objectives are earn bank. But whatever, even the private bank or whatever it is, they are coming under the purview of RBI. The bank types of commercial banks, as we saw in the previous slides, also the same thing. A bank is an institution where debts are commonly accepted in final settlements. Okay. So, what are the major divisions? Branch banking, unit banking, group banking, chain banking. So, in the branch banking, there are so many branches, same functions only. All the banks have the same functions only, accepting the deposits for the purpose of lending. So, account opening, accepting deposits, lending, fund transfer, okay, liquidity, these things. Unit banking refers that system of banking in which banking operations are carried on through a single organization without any branches. They don't have any branches. There will be only one bank. Okay. This refers to that system of banking in which banking operations are carried on through a single organization. So there are many advantages on this unit banking. Local funds for local people, intimate knowledge of customers, because in only one area, in that area only, that particular bank is available. So in that area only, that side, that much only the customers, and they know the customer very well. So by knowing the customers, they know from where they can, to whom and all they can give the loan, what are the services they can provide. All those things they'll be aware. Group banking. This is a system under which two or more banks, separately incorporated, are connected by being controlled by a single holding company or a trust. So two, three banks separately, but connected by the holding. All these banks are holded by one another. Group banking. Then chain banking. This is similar to group banking. Two or more banks are controlled by a single group through the ownership of shares and otherwise. So this is chain banking. Now, deposit in this category, banks act as a custodian or trustees of the deposits. Then investment banking. This refers to banks whose main function is to provide finance for investment to industrial concerns. So they give investment to the industrial concern. That's what they are called as investment banking. Then mixed banking. So deposit, it is actually the banks, no, in particular bank, this alone, that not like that. Banks are doing executing all the work. Major functions is investment. Then, so we saw these functions of commercial banks even already. So they are taking the deposits from the public, and whenever the deposits are demanded, banks must give back. Then giving loans. What are the loans? In the previous slide also, we have seen there are a lot of loans. So what are the loans? Overdraft, discounting the bill. So let me see one by another. Overdraft. So what is this overdraft? It is a short-term cash credit. So overdraft is a short-term cash credit. It is available for current account holders only. Current account holders only. Suppose, for an example, X customer, he is having in his account only 20,000 rupees. But to his account, a check comes for 25,000. The bank cannot honor the check 25,000 because money only up to 20,000. The bank cannot honor 25,000 rupees. The bank asks the customer, sir, a check came to your account for 25,000. What to do? Can we return it? So the person may say, that customer can say, sir, please honor the check. I will pay the money within a day or two. So the amount is overdrawn. 20,000 amount, but overdrawn to 25. 5,000 rupees extra, the bank giving for the sake of his customer. 2-3 days, maximum days. Within that, the customer must pay the amount. 5,000 rupees he has to pay back along with the interest. It is a short term. It is a short term for the loans. Okay. So money at call and short notice at any time, whenever the bank asking, the time the money has to be paid back. Loans and advances. So all these things we have seen already. Then agency services. Nowadays the banks is acting as an agent to the customers. So whatever the collection of any bill or anything, insurance premium pays, whatever that, the banks acting as an agent to your customer. And general utility services. So this general utility services are, it is a new arrival. The banks, they act as a trustee. They have the safety locker system. They provide travelers check. They are the referees. Referees means that is if they are doing, suppose any export import, the time we can refer the bank to give word about us to the other person who is being in the foreign. So underwriting work, lease financing, and performance guarantee, all these things the banker, he is acting, he is doing for the sake of the customer. It is called general utility services. With this, we end up this session. Thank you. You go through the lecture notes given and try to complete the assessment. Thank you, students.